of all of the different services that I've ever seen, I trust the data from this MBS Live. And you see, our lock desk puts out when they put out the rates have been posted emails. A lot of times they'll take commentary from Matthew Graham, the MBS Live team, and they'll throw it on the announcement. And what I would say is the reason why I trust a lot of the data that I see from MBS Live is several years ago, like 15 years ago, when I reached out to MBS Live when we were first doing hedging and trading on our own, and needed to see live MBS prices, and had a conversation with this group, and while their system didn't have enough data for me to trade, meaning it didn't have every single iteration of every MBS coupon and every month, the data that they use is coming from the system that I actually do use to trade. And so where that, is helpful for you guys, like what they're showing is what I'm looking at. You're getting a glimpse of really all you really need to see where the market's moving. And so with MBS Live, I'll share my screen because I have had an account of MBS Live for probably 15 years when they gave it to me back then to test it out and see if it would work for us. You guys, when you log in, I'm not sure, and Brad, you can tell me if this is what you guys see, but let me share my screen. I have to assume it looks similar, but
yes. Yeah.
Okay.
And we can rearrange our squares. It's pretty much what you've done in a clean, easy way.
That's what I was going to say, is like, that's the first thing, is like whatever's most important to you, you can make your charts bigger. You can get rid of things. Like if you don't want to see like the chat as an example, and you just want to see a big, chart, you can do whatever you want from a customization standpoint. And so, primarily, if I'm you, what I'm using this for is really checking out the economic data calendar. They do a good job at like putting a little star next to important data. So there's a bunch of data that came out this morning, and I didn't even pay attention. Like I didn't pay attention to the 8:30 data because not really market movers. But right now what's going on is this, as we speak, this 20-year auction. And so if that auction goes well, we'll probably see a little rally on
how do I know if it goes well?
So to be honest, you're two ways for you to see whether it goes well. CNBC always has, well, they don't always, it's normally for the big ones, like the 10-year auction and sometimes the 30-year auction. You'll hear Centelli on MBS. He's probably going to come up on the screen behind me in like the next 10 minutes. And, he'll give you a grade from A+ all the way down to like F. And really what the auctions do, when there's a lot of appetite for auctions, that means investors are buying or investing in longer term, which essentially for us in the mortgage side, a mortgage-backed security is a longer term asset. So if investors are putting money into the 10-year treasury or 20-year auctions or 30-year auctions, you'll see that MBS will pick up, because that means investors will also have more of an appetite for MBS. To address, you had mentioned like ticks and basis points, and like everybody talks differently when it comes to market move, but I can tell you in general, when you see the chart going up, it's a good thing, right? So what we see is when the chart is declining like this, so over the last several days we've had a sell-off where MBS, so the mortgage-backed securities, you've seen pricing getting worse over the last week. But you can see over the last, if I back it up to last month, you can see we rallied pretty good through the month of February and March. And if I back it up even further, you can see like we were deteriorating in price. So mortgage rates were getting worse all the way through the 13th of February. And then you can kind of see it bounced a little bit. And then ever since then, through the beginning of March, we were rallying. Now, with that being said, if you were following the market data, you would have saw a lot of the data was kind of coming out against us. And what we are looking at and what investors are looking at from a data standpoint is anything primarily jobs numbers and inflation numbers. And so everyone's trying to guess what the Fed is going to do, when they're going to first cut. And so right now the market is focused on tomorrow, being the Fed, so Fed rate hike. And what I would say at the highest level possible, we don't guess the market, and I don't encourage you to guess the market either. And what I mean by that is, if you have a loan sold, it's not, I never really advise floating per se. If you have a little bit of wiggle room, and like if you've got a little wiggle room on a lock where your pricing is a little better than expected, or maybe you've got a little rate room on a lock, you know, in those cases, it's like, okay, well, maybe on that loan, I would look and see, how today does, because I can tell you just looking at today, we've had a nice little rally so far. And what we're looking at to determine, so when we send out the pricing screenshot in the morning, you're looking at, I'm going to show you another screen real quick.
How many screens you got in there, buddy?
I got too many screens. But this screen is the data that's driving what you're seeing on MBS Live. And this is you'll probably recognize this as the screenshot that our lock desk takes when they set rates in the morning. What they do is they set a gray line, which is kind of hard to see on this chart, to be honest. They'll set a gray line where you can see where we set pricing for the day. See if it basically right here. And so when they put out a green target of 115 price, and then a red target of 107, we're right around a 111. And so what we're looking for is 4 ticks. So the way to think of ticks, not to get too technical, but basically 4 ticks is an eighth in price. And so when our lock test puts a green line and a red line, like we're looking for, once the market triggers that 115 on this is a Ginny. So let me switch over to the Fannie. When the market triggers on the Fannie 6 is the screenshot they sent out. You can see the gray line is 114, 4 ticks, which is an eighth in price, 118. So if the market hits this level or breaks through it or kind of sits there for maybe 15, 20 minutes, like we're likely going to push a positive reprice. And so if you know what level we've triggered, 118 on the Fannie 6, then okay, well, the market's getting better today, so maybe I should wait on locking. Let me see if it gets better later today. At the same time, if it was going in the opposite direction like it has over the last few days, start hitting that red line. If we break through that red line by a few ticks, or we're hovering on that red line, a lot of times we'll send out that negative market pressure email you see. And that negative market pressure email is just telling you guys, hey, you might want to lock your loan if you're floating a loan right now that you're going to be locking today. Good idea to lock, but it doesn't mean we're going to do a negative reprice. And so you can kind of align. So if I'm showing you back to MBS Live, so if I'm you and I'm looking at this chart, the UMBS is essentially the Fannie Freddie. It's a universal MBS, which is Fannie and Freddie. If you wanted to look at, say, a Ginny 5.5 or a Ginny 6, you can toggle with this drop down here. But I would say, generally speaking, they move pretty closely. Fannie, Freddie, and Ginny move pretty closely. So when you see Fannie's up, a certain amount of basis points, Ginny is pretty much up around the same. But what you'll find, the way the market moves is when the market's rallying. So right now we're kind of we're actually kind of flat from where we publish pricing. And we published pricing this morning around these levels, and that's where the gray line was 115, I want to say. And so when I'm looking at this, that's kind of where I'm, what I'm saying, if you're monitoring MBS and you see we put out something this morning that said 114 or 115, like you'll know, okay, well, I'm positive. I can see if we rally a little bit today, might wait until later to lock. Um, the
How do we
way,
know? How do we know what coupon? Like you're clicking on that 6, right?
Mhm.
That 5.5 has a big star next to it. And then we were talking the other day, like, are you watching 6.5? How do we know when you move?
So what MBS Live does is that they'll put what they call the most relevant coupon. And what they're doing is they're primarily guessing at like where the most volume is. And so what I would recommend is when we send out our morning snapshot, if you see our snapshot is on, we're normally saying Fanny 6, or like right now it's the Fanny 6. And then on the Ginny email, it's the Ginny 6. I would follow whatever we put out on our rate announcement, because that's where we're seeing most of the locks. And so we do, where MBS Live is going to be tracking a lot of different sources for interest rates. I mean, because you can see the same thing. Like they might say that the average rate is 6.875, and you and I know, well, 6.875 would require a pretty big concession and/or
Right.
points, a combination of the two. And so um, I would follow whatever we put out as kind of the going coupon on the morning announcement. But with that being said, if you're following, like let's say you are locking, so we do builder locks and some locks that are really low no rates. And so you do a really low no rate, you're going to be on a lower coupon. And so a lot of times the lower coupons will move more drastically. So when the rates are rallying on what you're watching is, let's say, the 6, a lot of times the uh the 4.5 or 5 might actually rally more. So you can see right now it's set. I think mine is set to ticks. But if you're more comfortable seeing things in basis points, if you just kind of hover over your profile, you can just click basis points, and then you'll see that instead of it saying 7 ticks, which is really about 21 basis points, so it must be up 6.5 ticks for it to be up 20 basis points. Um, this will convert it to basis points. So if you're more comfortable in capital markets secondary, like when we're talking about market reprices, we're always talking ticks because that's just the format of everything that we do. But in basis points, you can set your screen up to show you basis points. So in this case, the Ginny 6 is up for the day 19 basis points approximately.
What
And
was your
that's
ratio to ticks for VIPs?
It's always 4 ticks to an eighth in price.
How
So
many
every tick
VIPs then?
So every tick is 3 1/8 basis points, just over 3 basis points. So if in your mind, if you just think one tick is a little more than 3 basis points, 2 ticks is 6, 3 ticks is about 9 basis points, but 4 ticks is an eighth, so 12.5 basis points. So think of it as 4 ticks is an eighth, 8 ticks is a quarter, and then so on. So 16 ticks is 50 basis points, and then 32 ticks. So all of these prices are actually like 30 seconds. So it's like 14, 30 seconds, 13, 30 seconds. So literally, if you just take the 11 divided by 32, like that's the exact basis points. But you can set your chart up in basis points and it'll tell you what the day change is. And so one thing that I've done in mine, and you can do in yours, is you can edit your my change. So what this will do is it'll kind of do the work for you. So like if you just set this up, let's say I set it up for 10:30, right? Rates come out generally around 10:30. This will calculate what do I have it in basis points right now? So this will calculate in basis points approximately how much rates have changed since we published pricing. So if you toggled and rates came out early today or later today, like you can change the time if you want and say, well, rates came out at 11, so they probably got like a 10:45 market spot. And so you'd know based on where we publish pricing, well, market's down a little bit since we published. So, and in fact, I think if I'm looking at our market spot, it's probably most of the time I would just use say 10:30. Um, and so you can see market's kind of flat. There's a couple coupons that are better, a couple coupons that are up a few basis points, but generally speaking, we're looking for about 12 and a half basis points, 12, 13 basis points for this to start triggering like, hey, we might be thinking of positive reprice, or hey, we might be thinking of a negative reprice.
So we're
Um,
close then, reading it like this, you should go ahead and improve our rates, no?
well, no, we're only up about 3 basis points.
That's it. We're close though. You can smell
Yeah. No, I'm hoping. So I'm hoping to see what the auction did. Now, with that being said, if I can find sometimes let me see in the chat, that's one thing that I would say I typically leave the chat open because sometimes you'll find that in the chat, Matthew Graham, who runs MBS Live, um, he might comment on it. So like I know that there was a 20-year auction. It's on their, you know, oh, do I already have? There we go. So you might see the results from the MBS, the bond auction. I'm sorry, the bond auction, not MBS. You might see that pop up here. At the same time, like any kind of alerts that they publish, like yesterday they were publishing alerts. You can get text message alerts, you can get email alerts. Anytime they're seeing movement, you'll get alerts from the system. So they're basically were warning yesterday that rates were down about an eighth from earlier levels, and so that's generally the reprice target. But you'll see a lot of the live news streams. So this is just anything hitting. They've got different feeds from CNBC and other feeds, but the alerts, you can just pop open and see, what they're seeing. And a lot of times, like you'll either get an alert from them or you might get the same alert from us where we're saying, hey guys, heads up, negative market pressure. Um,
So why
but
why
their
do you
alerts,
use why do you use both? Like you had that big O screen that looked Mac Daddy. What are you using this for on your end of it?
well, I don't really use this um like on a day-to-day basis. So this is just like if I have this open, it might just be to see what they're showing as economic data for the day or this week. Like I can scroll through and see. Here's an example. So remember I was mentioning like the star system that they use.
Yeah.
So when you guys are trying to determine like, should I lock a loan? Should I not? Anything you see on here, I know they've got, here's the legend. So like anything with like no stars to 1 star to a solid star to a yellow or to 2 yellow stars, like that's just the relevance there is like how much of a market mover could these be? And so tomorrow you're probably fine. Like when rates come out, they're going to come out and you'll find in our commentary, we're going to say, hey, high risk event at 2 o'clock today. Because depending like what's going to happen tomorrow, no matter what happens, like we all expect there to be no rate hike. They're going to hold rates steady, but because it's happening tomorrow, people have been trading all week, just kind of positioning for this event. And so you don't know if, unfortunately, the market has kind of gone against us because there's no reason why we fell off or like leading up to it, there's no reason why we should have fallen off. But traders will kind of snowball trade if they start to get a little bit of momentum. You'll start to see on your chart, you'll start to see this kind of trend establishing. And so that's what was happening over the last several days. There's not really enough relevant data. I mean, there was some data last week that went against us. And by against us, stronger employment data or inflationary data that, showing inflation is not coming down fast enough. Like that'll go again. That's against us when I say that. And that's causing the market to look at the Fed and say, well, it's going to be longer for them to, first it was going to be March, which now here's March, and then it was going to be May, and now like that's May is pretty much off the table, and so now it's they keep pushing it further and further out. So now it's June or July, and so I think what the market is going to be looking for, and so when you're looking at these events, is I would just say expect a lot of volatility. And so it can trade, it could rally for us a whole bunch, or it could go against us. And it all depends on, like at 2 o'clock, they're going to put out the prepared statement. It's going to tell us that they're not hiking, and there's going to be all kinds of things you're going to find popping up in this chat and these alerts. You're going to find a comparison for every word that the FOMC put out last meeting versus this meeting. So there's going to be all kinds of comparisons, and depending on how deep you want to get into it, you're going to get a lot of analysis tomorrow at 2 o'clock. And then after that, there's going to be a press conference at 2:30. And so a lot of times what we see is on days like that, you're going to have a lot of volatility leading up to it. Then as soon as 2 o'clock hits, 2 o'clock Eastern, you're going to see trades in both directions. So you'll see, you might see the market rally a ton, and you might see the market fall off a ton. I literally can't trade during that time because there's too much volatility. And if it gets too bad, that's when you see the lock desk will suspend rates. And that's because like you can't catch a falling knife. Like we don't know how far it's going to dip, or sometimes it dips so far and then it jumps right back. There's so much volatility. Last time we didn't suspend rates, we just left it because we were seeing the trade for the positive and negative. And so it eventually kind of leveled out. And so we just kind of left pricing as it was. We took a gamble because we were seeing trades on both sides. So we figured it would probably shake out even. But what I would again reiterate is, loans that you really need a price and you've got that price, you're best just locking those loans. And then where you've got some wiggle room, that's where you can look at this and you can see, okay, on Thursday, so after Wednesday, we've got a lot of volatility I expect tomorrow. And if I'm looking at this on Thursday, I've got some jobless claims that are pretty important. And then I've got some S&P PMI data. So anything that's CPI, any inflationary numbers right now matter. And so you'll see 9:45 data and rates won't be out. So it's like if you don't lock it on, today or tomorrow, let's say, then Thursday morning, that at 8:30 a.m. through 10 o'clock, there's a lot of important data coming out, and you essentially can't get the loan locked before this data. So that's how I would use this economic calendar. And then you can kind of look far ahead if you want and see like what's coming out next week. And next Thursday is again another big one for inflation. And one last thing on the economic data is you'll see if I click on it, I can see what the numbers came in at, and then it'll give you a little blurb about what that is, and that's honestly like some of this data did not matter. Like you go back 10 years and from a rate standpoint, like it wasn't as relevant. And so right now what's relevant is anything that relates to jobs numbers, and in the jobs, it's going to be employment, wages and things like that. That's all important data from a economic calendar standpoint. And then what also helps is like we haven't put out the announcement, but if you look at next week, there's an early market close on Thursday. And then on Friday, the market's closed. So you'll find that, that's when like the lock desk shuts off locks early or doesn't accept locks when the market's closed. And that's essentially when Fannie Freddie, when you can't trade MBS, like that's when the lock desk ends up closing. And so you'll see an announcement coming out, about market closure for next week. I'm going to stop there first. Any questions on that piece? or anything for
It's
that
it's
matter.
open for everybody. If y'all got them, and please jump in. I pulled. I can tell you, I pulled out of this just myself is watching the news more, the data that's there. I'm watching the BIPs and stuff and have, but just knowing the calendar and even be ahead of that would make us a lot stronger in realtor meetings, coming into their team meetings and stuff on a regular basis to bring better value. It's cool.
Yeah.
Tom, I got a simple question on the real-time chart. How do you
Mhm.
get your view? I'm looking at mine and it's the candlesticks, red and green candlesticks. I like the view better with the.
Let's see. Trying to remember. It's not advanced charts. Settings.
If you click that little wheel underneath advanced
Oh
charts,
yeah,
right there.
right there. Yep. Do right there, line or candlestick.
There you go. Thank you.
Yeah, that's cool looking.
I
That's
mean,
the
if
only
you
button I
ever,
didn't push.
yeah, if you ever like want to really dabble into charts, like they don't give you much training on the advanced charts, but like you can do a whole bunch of stuff with advanced charts where it'll pop open like a whole new chart and you can play around with it. Um but yeah, that is I mean, for the most part you can get what you need out of this simple chart and then just toggle. I would just say you can follow the D6 or the 5.5, because the 5.5 is relevant for lower note rates, like I'd say lower sixes. But a lot of the locks I'm seeing are more in the six. And so that's what we're trending. But you can really, you can use this data. Another thing that you had touched on, someone, I think Brad, you had mentioned like realtors and you under the marketing section.
Yeah, we did
I'm
a
not
little bit of a tour
okay.
yesterday on some of the tools they can use. There's tons of good stuff in here.
Yeah, I was gonna say I really don't use this, but I know there's a lot of good, like once you set it up, there's a lot of marketing you can do there. Um, Another thing too that I actually point like in your so you have this learn, so you can go to their website and do learn and you'll find some of the basics. But because you have a subscription, you have access to a lot more. Um, if you ever want to, if you ever have time to like take some of these learning tools, you can like if you wanted to learn what what about mortgage-backed securities as an example, here's MBS. And then this will kind of run through some of the stuff if you want to do more of a deeper
Difference
dive.
between ticks and bips. It's all right there.
Yeah. But yeah, that's like you can certainly like run through this, at your leisure, but um they do provide a lot of valuable data. But for if I'm you, I'm primarily looking at the economic calendar, being prepared for, like, hey, high risk event, because nobody can tell you what's going to happen tomorrow, but you can certainly educate your client in that, like, hey guys, you know, high risk event, rates could get better or worse tomorrow. There's no telling what it's going to do, but 2 o'clock tomorrow, we're probably going to have some market movement, some volatility between now and then. And so kind of nudge someone over the fence, if you need to get them to lock. But I'm looking at the charts, I'm looking at my change, looking at the data to see like what's the market done since rates have come out. And I kind of don't really mess with that. And then did you guys already set up alerts? Like, did you already set up, have you talked about setting up alerts?
You could hit on that for a minute. That'd be great. We did vaguely, but I think that's
So,
important. I have those coming to my phone. I'd like to see what you do.
well, so like I set up, I don't know if any of these, so you can set up alerts to be email, you can do text messages. And so I'll be on the road and I will get, text message alerts and emails. Like if, you can set it up to be like, where's my, right here, I'm sorry. It's a custom price notification. So you will get alerts whether you set it up for email or on your phone, instant reprice alerts, and that's the ones that MBS Live is pushing, and market updates. Like, so I'll get those on my phone, and email, as you can see. And then down here, you can go set up your own price alert. So you can say, I want I must have set up a UMBS, so a Fannie 5.5 at noon. I'm going to get an email and a text message to say what the market has done, on the UMBS 5. And then I also get one at 4 o'clock. And so that's just my measure to see, because in my world, my desk, my team can't trade after 5 p.m. Eastern. So like, I'm doing this as just like a checkup, because I'm getting, I'm in meetings, I'm doing things, and like I just want a quick snapshot. Where's the market at noon? Where is it at 4? And then, not sure why I did one at 9:27, but apparently I have a text message at 9:27. That's more of like, market starts trading at 8 o'clock, it opens up. It really starts trading like 8:30, 9 o'clock. And then I guess I set one up at 9:27, and I do get it. I do remember I get a text message 9:27 every day.
I noticed on this software versus MBS Highway, which a lot of us have moved off of to this, that you'll start seeing the bips and stuff moving at 10 o'clock, where on this you're seeing it well before that.
Yeah. Yeah, you definitely will. And I've got some pre-market things firing off, 7:30 a.m. I'll get an email. I forget, like some of these I'm just like, it just happens and I don't even remember, but 10-year treasury, I get a snapshot of what that's doing at 4 o'clock. And so I set my alerts just for my purposes, but like you can set, like if you wanted to set an alert, say, hey, if the market moves 15 basis points plus or minus on this product, the UMBS 6. So I'm going to get an email, I can get a text message alert, I can say how much I want it to move. I have it at 18 basis points. So if I see, or if the market moves more than say 18 basis points on the Fannie 6, up or down from 8 o'clock on, I'm going to get an email. Now, I'd recommend text maybe as well if you're really looking for price movements, but that's a valuable tool too, because everyone can get sidetracked, everyone can get busy, and if the market's moving and you have a loan to lock, like this is your kind of backup, your eyes on the market while you're not staring at your screen.
Very helpful. Other questions, guys, that are sitting back? Anything come up? It's not you, it's
Anything?
us.
Yeah.
I
know. I mean, really just, I think the alerts, the price movement, and the economic data is probably the biggest value. You guys might find a lot of value in that marketing stuff. I know.
Yeah.
I played around with it and it seemed pretty powerful.
I've been on this for a bit, and you're looking at different stuff I'm looking at. I'm gonna go in there. My alerts aren't. I'm gonna go play with an 18 BIP alert and get that dialed in. There's some things for sure, and the data. Like you wake up and you're like, wow, the market just changed 30 bips. Well, you could have known something was coming up the day before, one way or another. At least been prepared, and like I said, passing on to some of the agents and stuff. It's good. Last round. Any questions?
Hey, Brad.
Shoot.
Hey, man. Hey, I track on my screen the 10-year also, because I find the agents and customers are a little more clued into the 10-year than they are on the MBS. And so it gives you talking points.
Well, it shows it going up and down, like what it really, like you're telling them rates did,
Well,
right?
The thing is, everybody right now is clued into what the Fed funds rate is. But if you take just a 3-month view of the 10-year, it's as low as 378 and as high as what it is right now at 330, 332 earlier today is the high point in the last 90 days. And the Fed funds rate stayed the same, and yet we're more closely tied to the 10-year than we are to the funds rate. And And so I track that and use that as a talking point.
Yeah, that's that's to your point for everybody on the call. Like you can track 30-year. Now I'll be honest, I never use a 15-year MBS. I don't even hedge with a 15 years. So like the 15-year pricing right now is so close from a trading perspective to like a 30-year, and the price movement is so similar that like I trade all of my 15-year products are getting hedged under Ginnie Mae 30 or UMBS 30, but you have access to the treasury here. So if you're ever looking for that, or just want a chart of the 10-year, or just want to follow the 10-year, you can. And then what I would say on the 10-year is most of the time, and as you're watching this, you'll see like the 10-year sometimes might run, you might have a run up against, when the 10-year is going up, mortgage rates are getting worse. But sometimes you'll see that the mortgage rates don't exactly correlate with 10-year treasuries. So if you're looking for like an ID on price, use the MBS, because that'll more or less, that'll correlate more closely to price movement as you would expect to see it on a rate sheet. But to your point, so Brent has a point where everyone has access to the 10-year, right? Not many people have access to MBS. And so if you're trying to illustrate something for, clients, like you can show them, like, look at this 10-year, like, look how much it's moved since the beginning of the year. And right now we're at the high point. One point it was 434.5 we hit, thought on an intraday, but it must not
Intraday,
be.
yeah.
Yeah. So yeah, we're definitely from that perspective. You can see just one last thing to touch on is down here. You can kind of see where MBS Live is putting some ceiling and floors, and what that really means.
You're not sharing. You're not sharing.
Oh, I'm not
stuff.
sharing. I'm literally just clicking on the screen and not showing you guys anything. Let me
There we go.
So I was toggling between the 10-year and everything earlier. So you can obviously show that 10-year. To Brent's point, you can share that, do whatever you need to on this 10-year chart to have those conversations. But MBS Live also put some key levels out there. So if you're trying to determine, and you can click on this to dig deeper on ceiling and floors, but generally speaking, what they're trying to illustrate for you is if this little arrow is heading towards the ceiling, then in their minds, we might be at, levels, we might see a trend back to better levels. Whereas if we were down closer to 405 being the floor, then what they're trying to illustrate is, all right, we're at pretty good levels based on their trending. We have a higher risk for rates to get worse. So again, these levels are going to continue to change. But if you're trying to see where you are on their barometer as far as like, hey, do we have a higher chance of rates getting worse or better, you can kind of use their gauge. But near term, 435 is kind of like that ceiling where if we close above 435, then I start getting concerned. We are heading towards like 450 and a little higher, but we seem to be holding that 434 level, 433, 434 level. So it seems like it's holding until let's see what happens tomorrow. But what other questions, any other questions that I can cover?
Yeah. Hey, Tom, just a quick question. We've all been so conditioned using Barry Habib and MBS Highway, and he's always talked about 50-day moving averages, 100-day moving averages. And I mean, I've played around with this and I think it's super powerful. And I don't know that, other than looking at trends on what is showing up on the screens, but, for example, on the 10-year Treasury box, there's green lines that, are at the very bottom and there's a red line at the top. Are those insignificant to any level, like meaning, moving averages? So you can sort of kind of blend that in your mind as to what we've been accustomed to, hearing, or should we be ignoring it?
These might be, maybe I put those on there. I don't know what those are. But I would say, reprice indicators. So here's where you would find the technical indicators. So if you're used to seeing a 50-day moving average or 100-day moving average, just use that little toggle again, that little radio button there, and then click, and you can see the 50,
Okay.
25. You can see if you're used to seeing it in that way, just do that, and then you can, well, I'm not gonna see it on that, but you can see on this chart, you can kind of see where the moving average is. Does that help?
Yes, it does. Thank you.
That's great. That helps me too, because he's right. MBS Highway always had those, 25, 50-day, 100-day moving averages in there. That's cool.
Yeah,
I
whatever
can add
whatever
those.
you want to see. Yeah, whatever technical analysis you want to see, certainly you can add them, remove them. Yeah, I just got rid of, on my chart, I had show reprice levels. Not really sure. I can't even tell you what, can't even tell you what that's really tracking. I'm not really sure. So just get rid of them. They must have been older reprice levels, because if I do it as today, maybe if I show reprice, they're not really relevant. So,
Well, this has been
Yeah.
awesome. Other questions? Well, thank you for helping us. This was great. Time well spent. I got nuggets out of it. I can go grab in mine for sure. I'm sure others did as well. If we need you again, we'll holler. Is that okay?
yeah, definitely feel free to reach out.
You
Glad to
gotta
share.
go. You're supposed to be doing a reprice for the better.
That's right.
Not yet.
I know we're getting close. We're getting close. Maybe we'll get some momentum. You'll also read in here like what the times the actual markets close. Like MBS kind of closes at 3 o'clock Eastern, but we can trade until 5. And so sometimes you'll see get a little momentum going up to 3 o'clock. Sometimes it'll continue.
Okay.
But yeah, so we'll definitely our goal, if you notice when we put out our alerts, if we trigger for positive reprice, we just do it. Whereas on the negative reprice alerts, you see the negative market pressure. We always, I say always, can't promise you indefinitely, but we always try to give you at least 30 minutes from that negative reprice alert. So if you get that negative reprice alert, it means, we could be repricing. We try to give you at least 30 minutes. If it gets any worse and 30 minutes has gone by, we try to hold out as long as possible. But that's kind of
good to
from a
know.
timing perspective, kind of keep that in the back of your mind. If you get our alert, it means probably going to reprice. But yeah, reach out if you guys have any questions as you're learning the system. If you have any questions, say, hey guys, I noticed you did a positive reprice, or, but my chart didn't show X, I can certainly try to shed some color on that.
That's awesome. Well, thank you again. I know your time is precious. We appreciate it. And we'll holler if we need more from you, but thank you very much. It's been very helpful.
That's good. Thanks, guys. Good to see you.
Thank you.